Hi, Warriors. Good turnaround Tuesday. Someone's mic is open. How's everyone doing? Hi, Ace, Anthony, Dennis Geekus. Everyone doing all right? Okay, so I'm looking at the euro here, and we had this big breakout on Friday, but I'm not seeing much acceleration. Hi, Ping Pong. So that makes me a little bit neutral here, especially since EG is starting to come off, something I talked about yesterday. I already booked some stuff here on EG. So EG has had nice little divergence up here at 30. We might get one more shot up here. The off numbers all the way down here around 88.30. So has some work to do if we're going to get a 2-week reversal. But as long as I remain negative euro pound and it's not, I'm negative long term, right? Look at that move. It's really just a counter trend trade that I'm looking at. Maybe halfway back to 87 would be ideal. Similar to the call that was made in Aussie Kiwi when we were up here, right here. And Aussie Kiwi has bounced very nicely from the 50% retrace level. Thought it might go deeper. That's starting to look like that was it. So we had a little 2 drive down here at the 50% level. I'm flat Aussie Kiwi. I still think there's a chance that we see 61.8 here. So I didn't buy it here, but this was a short last week, remember? So, it was decent. And something interesting setting up in the S&Ps. I've turned into the camp that I think we're going to see a new all-time high, but there could be a trading opportunity here at the 78.6 level, 29.10. In fact, I think Andre mentioned it last week before we had the explosion when he was on, and he'll be with us again today. So we'll get an update on that. But 29.10 is 78.6 back, and even if it's not the big break, and I don't think it is, but maybe we just get a pullback from here before we go to new highs. I think that's going to happen. And maybe Microsoft is the foreshadowing of that. And Microsoft has been one of the strongest leaders in NASDAQ, actually made a new high. Where are you, Mr. Softy? I want Mr. Softy chocolate dipped cone. Here's Mr. Softy. So MSFT sounds like Mr. Softy. But you can see we made new highs in Microsoft yesterday on the daily. And the last high, look how confirmed it is. So, knowing when markets are confirming highs or lows is valuable information, not as a trigger, but as a bias. So knowing that we had a confirmed high here, that would give you the bias that this is just going to be a correction, not the high, just a high. And you could have anticipated buying some break. This would have been a tough day to buy. But here we are. When you have a confirmed high, you're at least going to get most of the time, not all the time. It implies another high is coming. And then you see what happens at that next high, and you have some glaring divergence. I wouldn't step out and short it, but if I was long, I'd get out. Some short-term stuff is still, looking okay. The momentum on the 1 hour confirmed, I believe. No, yeah, I think it's got to do a little work here. Maybe we get a pullback now, previous highs, something like that. But anyway, looking at that, and then the interest rate play, because of what happened yesterday, over the weekend with tariffs not going on, I may miss a bottom in U.S. dollar yen. I don't feel like shorting it, but I'm still going to be patient and see if I could get one more decline here. I think even Andre and Steve allowed for it. This could have been the bottom. I mean, we have a gap. It couldn't fill it. And it's all dependent upon this. And, rates seem to be trying to turn. something else we talked about last week, which it will be U.S. dollar yen bullish, but here you goes a 10-year. It's interesting. It's trying to get back inside of this throwover. So we'll see if they could turn it back one more time. If they could turn it back one more time and take it down one more time, to me, that's going to be a TBT buy, a US dollar yen, a bond short. And that could still happen. I mean, you look at the 4-hour, even though we're back in here, and the dollar's doing the same thing. We had throwovers and the dollar's back inside. But, we could still have a 3, 1, 2, 3, but I don't think that happens until S&Ps start to pull back again, maybe from the 78.6 level. And there might be a long here in the metals. I also want to show the gold-silver ratio, but just for a pop. So here we are, some moving averages here. US dollar yen, unless US dollar yen turns back down again, gold's not going to turn back up. But if we could get one more break in the yen to that level I was talking about, 107.60, we could get another pop. So this was a 2 drive. I thought I'd have a chance this week. I'm strongly neutral here. But one thing I do want to show, and I've been a little early on this, but thinking we're in a topping process on the gold-silver ratio, and maybe it's today. Okay, we're diverging pretty dramatically on short-term stuff, and the daily, it's grinding out something up here. So I wouldn't, if I was looking for a long in the precious metals, I think I would go with silver now in case we're in a topping process on the gold-silver ratio. Give me a while if you understand what I'm talking about. You don't have to agree with me. I just want you to understand some of the things that I'm talking about, like confirmed highs and gold-silver ratio and all of that nonsense. You guys get it? Okay. You guys members yet? So you could do this every morning and open the world of ForexAnalytix research to your game plan so that when you go on to the battlefield, you're ready with great looks from Blake, from Stelios, from Steve, from Grega, from Andre. So you need to have ForexAnalytix as part of your intelligence gathering and arsenal to attack the markets every day, in my opinion. Okay. It's all right here at your fingertips. So organize yourself. And, one way, if you're a disorganized person, is let someone else organize you. And these guys have done it. So you could check out the trial. And then if you're overseas, you could talk to our sponsors, Trent and Justin. And if you're fairly active, you'll have your subscription paid for. If you're in the US, could be a car payment, right? Or the money comes in, you put into your children's educational fund for later when college is going to be $20 million a year to send your kids to college in the next 10 years, right? I know that Blake is saving up for his boys and the Steves for their kids.
At some point,
Raga, huh?
At some point, this
you haven't started socking it away for Jason.
This whole stupidity with university studies that everybody has to have a university diploma will just go away, especially the way they're, they're mismanaging one more market, which is, the
student loan.
Yeah, the market for higher education, exactly. One of the main reasons that education cost has been going up is, as always, because the government decided to intervene in that as well.
Good point.
No, that's reality.
Yeah.
That is reality. They started guaranteeing loans for people to go ahead and study, and the fun part is that many people get a degree that is more or less worthless in the real world, but they do get a debt after that, and
Which is real.
which is absolutely real.
Yeah. I just thought maybe you took after Donald Trump's father, who I think paid him either $250 or $500 a year when he was 3 or 5 years old. I don't know what he did, but that was his annual salary. Do you think Jason, you could pay Jason a salary of about $250,000 this year for getting sick and throwing up on you, buddy? Huh?
I can definitely have him pay me a salary for all that when he grows up.
I know you want the medal. Okay.
Yeah.
Anyway, Steve. So people are asking me about the euro, and we had this breakout, and it's not accelerating, and now
It's
euro.
not. No, it's not.
What do you do with it? Nothing, right?
Not necessarily. I mean,
Do you think this dollar breakdown, which looked like it happened last week with no follow through, really, where are you at on the dollar and euro then?
I think there is still a decent chance that the dollar is going to break down.
Okay.
And it's as everything.
Hanging by a thread.
You can look at you can look at things from two different perspectives, from two different sides. So what you're saying about the euro, oh, it broke above the trend line, but it's not accelerating higher. True, but you can also interpret it like that. It broke higher.
It's not giving it all back either.
It has stalled, but it's not pulling back, right? So perhaps this is a short-term consolidation before accelerating higher. One thing is for sure, I don't think it's going to take many days for us to find out, what's happening here. And there is one more thing that is certain. The risk-reward ratio still favors people attempting to be short the dollar because, if this is a reversal that we've been seeing last week, we're still very, very close to the reversal point. Yeah, and we're still very close to the reversal point, right?
It's only short-term traders that look at 15-minute charts and hourly charts that feel late.
Yeah, which is absolutely no problem if that is your trading style.
Yeah.
It is one of the reasons why we have Polly and even Amanda, although Amanda is not only taking short-term positions, but because we know that some people want to trade, the markets, shorter term.
Right.
That's not my trading style, though. So, for my type of trading, we're still very, very close to a possible reversal point, which means that risk reward is still quite appealing to attempt to be short the dollar. Now,
you want to grab the charts?
Yeah, absolutely. I want to grab the charts.
Grab them, buddy.
Yes, good morning.
Is there anything you want to show first, perhaps? We have time. By the way, Blake is going to be with us back tomorrow. So, starting tomorrow, Blake is going to be with us regularly after Dale.
He's back. Yes. Well, it takes time to get back from the edge of the galaxy.
Oh, that's true. That's true.
It's a long ride, man.
Yeah, but he's very good in physics. So string theory,
a wormhole,
string theory, and everything. And I'm not talking about the strings women were in the bits,
or that they keep their men on.
Yeah, that's a different story. Yeah, okay. He'll find a way to fold, space so he can be back, instantaneously.
Steve, you can take the screen if you want. I have 2 or 3 things to mention.
Absolutely. Let's hope we don't freeze again.
Yes. So first of all, let's start with the data. So we had the most important economic indicator out of Norway today, which is CPI. It actually came in less under the expectation. So we were expecting 2.9% year on year. It came in at 2.5%. So that was quite a big miss.
Poor Norwegian people.
Yeah.
Living increases only by 2.5% per year. The central bank really has to do something about it. It's brutal.
Yes, yes. Well, jokes aside, the krona actually naturally spiked. Well, Euro Norway and USD Norway spiked higher after that number, but it's come back down. It's actually the krona is actually stronger on the day. And I was looking at the historical CPI prints, and CPI in Norway has actually been quite volatile. In late 2016, we were printing 3.5 to 4%, and then within a year it was down to 1%, and now it's back to 3.5%. So it's not, a single reading shouldn't be taken as a disaster or a miracle, but the rolling average currently is between, it's nearly 3%.
One thing is for sure, they can't claim that they're afraid of deflation.
That is true. That is true. So I think Norges Bank is still on course for another hike, and then we see how it goes. The other very interesting print today was average earnings index out of the UK, and that came in at 3.1%, which is very high. Historically, it's near at the high end of the range. The last reading was revised up to 3.3%. So there's no real issue with wage growth in the UK, that's for sure. And with inflation around 2% or 1.9, I think, last print, the gap is still pretty good. Earnings are growing faster than reported inflation, and so that was quite interesting. And the pound took a little breather because it's been quite severely beaten the past few days. And the other really interesting thing was that Donald Trump tweeted a few minutes ago, and he's having a go at the Fed again. And he did say that the euro and other currencies are devalued against the dollar, and that puts the US at a big disadvantage. And he also said that the Fed interest rate is way too high, added to ridiculous.
Way too high.
Yes,
way
yes,
too
yes.
high.
Yes, and he said that the Fed don't have a clue. So that's very nice.
They don't. rates are way too high because the best economy ever needs 0% rates. As you can be taught on any economics book. Absolutely,
yes.
absolutely.
It's crazy.
Logic has completely gone out of the window, and I'm not talking about Trump only. I'm talking about anything that has to do with monetary policy.
Yeah, it's definitely a new normal we're living in the last 10 years or so.
I think it's a new abnormal. I have a different theory about that.
Yes, I would agree. The other interesting thing is that we have the G20 summit later this month, and Donald Trump again said some things. And he said that if there is no progress in those trade talks, he will not hesitate to impose more tariffs on Chinese imports. So that's a really great way to go into negotiations, by threatening even more. But you know what? It might work. So who am I to judge? And so yeah, that's pretty much it. We have US what is it, PPI later in about 10 minutes. And
who cares about that? Anyhow, it's not that the Fed is willing to do something about inflation even when it comes. So
yes.
PPI is, after all, just a leading indicator to CPI, and they're not willing to do anything about CPI. That's why they've kept moving the goalposts. So even if at some point we get 3% CPI, they're going to start telling us, because they've already prepared the ground, that 3% is fine, because they are looking for 2% symmetrical. And since at some point we were even at 1% CPI, that's great now, because we're just making up for the loss of inflation that we had, during the prior years.
Yeah.
Write that down, and you'll see if I'm right or wrong. I mean, it's 100% certain. If you just read their language, it's more than certain what they want to do. They want to keep ignoring inflation by claiming it's not going to be a problem, and at some point, it's like the story with the shepherd that kept crying wolf.
Yeah.
Yeah, that's exactly how the situation is going to end up with inflation one day, and then they're going to be trying to see what the hell they can do to contain it, but it's going to be too late. But until that happens, it is what it is, and we have what we have. So let's start by the USD NOK, since you mentioned it.
Yep.
USD NOK is, as you said, it has already given back its gains on the day. And it still remains close to this 860 area, and this ascending channels support. Keep in mind that this is almost a 1.5-year-old ascending channel. So it will be interesting to see what's going to happen if we actually bridge through the 860 area, because I think we can see USD NOK accelerating its downside from there. Until that happens, we've been contained in this 860, 880, 882 area, and you either trade it, you trade the range I'm in, or you wait for a breakout. Because I do think that once we break out, if we break below 860, we should find ourselves down to 840, which is also a significant area. If we break above 880, I think that we will quite easily make it up to 9, even higher. We might even climb higher towards the ascending channels resistance once again. So let's see what happens from there. Now, having to do with USD CAD, which is quite correlated. Yesterday we managed to close the gap, but that is all we did. We never managed to climb above the 200 DMA. I mean, we did intraday, but we didn't close above it. We closed right at the 200 DMA. And today so far we have an inside short candle. That tells me that USD CAD is likely about to resume lower, because this complete inability to rebound after quite a horrendous week for USD CAD longs, because last week we had 4 out of the 5 days being down days, and almost all of them were very strong. They had very strong bearish action. So the fact that we've just consolidated after that doesn't look that well for people that want to fade this weakness. I think, as we wrote yesterday in analysis, as long as it trades below 133.40, the path of least resistance remains lower towards the confluence of supports at 131.20. One pair that we didn't see yesterday, and for a good reason, but there is a reason to have a look at it today, is the CAD yen. The CAD yen was trading within this descending channel, but as it seems, yesterday we were on the precipice of breaking out, as it seems we're doing so today. So this can be considered a little bit of a bullish development. Personally, if you're asking if I would be buying it, no, I wouldn't. I think there are better opportunities out there. But it does constitute some kind of a bullish break, which likely opens the door for a retest of this horizontal support resistance area at 83.40. But as I said earlier, I think there are better opportunities out there. If you really look at this chart, I don't see anything really clean here. I mean, even if we're trying to recover higher, this type of price action is definitely not the type of price action I would want to be trading for anything than intraday type of trades, which is anyhow not what I like to see. USD SEK, let's also have a look at this one. A little bit of a rebound, but keep in mind, be careful. 946 to 950 is an area of resistance. So it was an area of support. It's now an area of resistance. So I would be a little bit careful there, because I wouldn't be surprised if we get rejected once again from there. So, keep an eye on that. Now, let me see if we have any questions. There it is. How do you think the unrest in Hong Kong for USD HKD? That is a good question. I know exactly what you're talking about. If people haven't noticed, there are big protests in Hong Kong. It has to do, if I'm not mistaken, with the ability to extradite people to be trialed in mainland China. Correct me if I'm wrong, mate. Scott. It is more than obvious that we have a ceiling here, right? Just look at 785. So, things are quite simple. Just look at it. I mean, this 785 is literally a ceiling, not in a matter of speaking. So I don't know what to say here. Sell any attempt to retest 785. And, as it was happening with the S&B, if at some point 785 breaks, just, expect expect this to blow out higher, literally, to blow out. So, against 785, anything looks appealing to the downside, irrespective of what is happening with protests and the unrest.
Steve, I don't think I've seen such a chart in a long time. It looks like it's a hard ceiling. Maybe it's a.
No, it's more than obvious that it's a hard.
Is it the central bank? The central bank must be
This
doing something.
This is not a type of price action that any market could develop, Stelio. We're talking about hundreds of retests of 785, which immediately gets rejected. You see this?
Yeah.
This is artificial price action. There's absolutely no question about it.
Oh, our friend Bob says the USD HKD is pegged.
Yeah,
so if it breaks, that makes sense.
Yeah, if it breaks, it's another S&P event. Exactly what I said. And if it breaks, keep in mind that it's going to just gap up to eternity. I mean, it's going to produce like a huge gap higher, and it's going to squeeze people to death, literally. As it happened with the S&P, there were a lot of firms that blew up that day. There were a lot of traders that blew up their accounts that day, actually.
Steve, by the way, your screen is frozen again, so you might want to exit.
My.
Well, it's been, 15 minutes? Yeah, we need to address this problem. I don't know what the problem is, but...
Yeah, but I don't know how to address it, but that's a different story. Okay. Okay, by the way, today we're going to have Andre with us. So, I don't know, is he here? Because it's going to be good to pass him the screen for some time.
He is here.
I am here.
Oh, there you go. So take the screen from me.
Good
Andre.
afternoon, everyone.
Good afternoon, mate.
I can take the screen for sure.
Yeah, just click share and choose your screen.
Can I stop sharing your screen?
Yeah. Okay. Stop sharing my frozen screen.
Okay. I hope we solve that small issue sooner rather than later. So
I can see it. Yeah, I can see it.
You can see my.
I like your DAX chart. I was showing
DAX,
that.
No? Yeah.
I was showing that yesterday, and it's almost a perfect ABC correction. That correction lower.
Yeah, and it is because we have these 200 moving average also supporting. This is a 12 hours time frame chart, by the way. It's not a usual daily chart, but it can be different if you change into a daily time frame chart. We see the 200 moving average, daily moving average also supporting the price. Sometimes I go into a lower time frame just to take a notion of price action between those.
Guys, I just want to remind you, in 2 minutes we have PPI, so we'll have to interrupt.
I know, Stelio. I have it in front.
Okay.
Carry on. We'll interrupt when the time comes.
Okay, you can take the screen if necessary, Steve.
No, well, let's first of all see what we're going to get, because if we get, what the market expects, I don't expect any kind of volatility due to it. So if we get something out of the ordinary, then we can see what's happening. Until that happens,
okay.
Go on.
I will start with gold, trading above this descending structure. I published that chart inside ForexAnalytix, expecting the breakout above this trend line and the formation of one eventual butterfly pattern here at 127 extension. So why the 127 extension? Because we had at that point weekly resistance, a fractal resistance there, and I was expecting somehow the price to respect that level. The price didn't respect that Fibonacci extension. It has extended to the 1618 extension, which is another variable for another harmonic pattern. This is the crab pattern, and by default, the crab pattern, and by default it will search. It should search for the 38% retracement. So we are almost there. We are now threatening again that this weekly fractal resistance.
Yeah, the question as always here is the following: do you expect this to be a significant high, or just this crab pattern will lead?
That will depend. That will depend, Steve. At this point, we are also facing a potential double top there. So
yeah, but it's too early to call it.
It's completely nonsense at this point. We need to break out below this weekly support in order to validate that shape as a potential reversal behavior. Until there, we need to wait. what we have is what I see is what I trade. So at this point, we have this crab pattern approaching targets synced with this previous structural resistance, which is, by the way, the fractal. So let's say
PPI month on month as expected 0.1 versus 0.1. Core PPI 0.2 versus 0.2. The year on year is lower though, 1.8 versus 2%. And core PPI on the yearly one is as expected 2.3, 2.3 versus 2.3. So I doubt it. I'm going to be monitoring the markets. If we see anything moving, I'm going to let you know. But until then, I'll let your cat do all the talking.
Okay. So this is what we have for gold, and even more constructive. Even though, no, my wife just arrived home and she started to call for her, obviously. Even more constructive than gold, I believe, is this silver chart. So we have this bullish shark pattern at 224 extension. The development at this point, we are seeing this eventual kind of head and shoulders or inverted head and shoulders. By default, we search for.
So you still like the upside in?
I still like the upside for metals. Just because we have one bearish pattern, it doesn't mean the price will rally below those. No, so I still believe there's potential to find support around those levels. One of the reasons why, and this is a common and by default a very basic concept, we have broken this descending structure, the descending moment. Outside return and the golden fib on hold at this point. So we have the golden fib exactly nailing the close price. So it's
it's at 460. I agree with you. It's very, very,
so
it's important level.
Well, it is what it is. We never know if the pattern will develop or not. We need to wait. And again, it's another pattern that requires a validation above this next zone. So we need the price to trade above these levels in order to increase the probability to trade higher, based and supported by the inverted head and shoulders. Note that this shark pattern, beside the fact that it has extended a few points below to print these weekly and daily fractals, below daily fractal support there, it has already achieved the 38% retracement. In fact, this is a 38% retracement from all these structure, all these bearish momentum. So the price has rejected the 38% retracement. It's completed another bearish shark pattern, a 224 extension as expected and as published before the completion point. It has printed.
One thing is for certain, is that the risk reward is appealing.
It's still appealing for someone who wants
to the long side.
Exactly, and I believe
because if you buy 460 and you put a stop loss below the.
No, that is crucial for anyone that wants to buy or to go long on silver. We need to respect this fractal.
Oh yeah, absolutely.
And eventually, if you are trading for a very long time frame or a very long term, eventually respecting this monthly fractal will not be so absurd in my point of view. So eventually respecting this monthly fractal is also, it makes sense for a long-term approach if we are allowed to. So those are my views for silver and gold. So beside the fact that we have this bearish shark pattern on gold and silver, it doesn't mean the price will not trade higher.
Dale mentioned before that you had a target at the 78.60 in the S&P. Is that
S&P?
I'm saying that because we are about to test this. Right.
No, you are right there. Not only S&P, but also Dow Jones, which is actually it's almost a mirror for S&P.
That's not a surprise. They're very cool.
Yeah, that's not a surprise. But both of them nailing or approaching the 78% retracement from all these swing lows. So all these bearish
nice
momentum.
Area to see a pullback, right?
It's a nice area for Well, it's a nice area, Steve. It's a cipher pattern. I don't know what to say to you. It's a pattern. It's worth or not our money to put at risk to try to pull back or not. That will depend which type of trader we are. But it's a cipher pattern. It's a 78% retracement. Usually, it will not. It will invalidate very, very fast. So what I say is, if we see the price starting to trade above these levels, retesting the monthly fractal, this is no longer a cipher pattern. That doesn't invalidate the possibility to trade lower from these monthly fractal resistance. But we are not trading. We will not trade the cipher anymore if the price starts to trade higher. So the cipher pattern by default will nail the 78% retracement, and it will fall immediately. Actually, we are now approaching that level. So by default, I want to see a fast momentum trying to find support with a minimum 38% retracement. So for those who are interested on that. Similar to that, Dow Jones is also has already, actually let me try to, exactly, the market has already filled the criteria, the Fibonacci criteria for the pattern. Well, let's wait and see. We never know what the price will develop here. We can see a period of new highs above this structure here. Let's wait and see. We never know what the price will do at this point, but it's another cipher pattern. DAX, a little different story here. So I don't have a cipher pattern here. What we have is inverted heads and shoulders, a breakout of this descending structure, a violation of this 200 moving average as previous resistance, now is acting as support, and the default projection for the pattern at 1254. So this will print new higher highs above these previous
that's how it
weekly fractal. That is for German DAX. Then, and because Dale has mentioned it before, this is dollar versus yen, which has been supported by this bullish divergence, as I mentioned before. Never ignore the possibility to trade lower, but we have now a new daily fractal support printed at 107.81. Completion point for this shark pattern, default target for the shark, as always, the 50% retracement that will force the price to retest those fractal resistance and support, broken support level. Similar with many other yen pairs. CAD versus yen, because you pushed that a few moments ago.
It's breaking out. Yeah,
breaking out, filling some of the criteria to identify later a potential cipher pattern at 78% retracement, very similar. It's the same pattern that I showed you before on S&P and Dow Jones and others. But we have, we need to wipe out these daily resistance and daily...
Nice. That area that you're looking, the 78 is also horizontal support area. And
horizontal support area.
Yeah, and resistance. And that is the area I actually said, that my target. So it's another nice...
Yeah, and let's see what will happen from there. So we had previous structure support and resistance there, synced with that the formation of the cipher. So we are now breaking this descending structure, and for those who trade breakouts, eventually this has been the trigger for
also
the bullish.
We have a runaway gap there, eh?
A runaway gap there, and a retest of these, a few retests of this descending trend line, which may force the price to trade even higher. Now let's go into Dixie, into a 4-hour time frame chart. I was expecting the 113 extension to put some pressure there. The market felt that pressure. Actually, the market has formed kind of a double bottom there, but it has completely failed, and we are now retesting the bottom, or the support of that eventual or virtual double bottom there.
Keep in mind I've mentioned that trading strategy when this happens. so far the DXY has an inside day to an inside day. So if we do close the day with another inside day, then it's worth monitoring because there is this trading strategy that when you have an inside day to an inside day, then once you break out from the range of the first day, you should expect to see continuation. So this is something worth monitoring. Of course, it's early on the day to claim that this is going to be an inside day, but so far we have an inside day to an inside day. So let's see what happens.
In terms of patterns, obviously we have this confluence between two advanced pattern formations. One, this crab pattern at 168 extension, which is the same Fibonacci level used to it's an extension from this weekly fractal to this weekly support. So extended below at 168 extension, and the market will feel some of the criteria for this gray crab pattern at 168 extension and this shark pattern at confluence there. So there's also the golden fib at 61x retracement there. So there's a cluster or a small box that I will pay attention once the price and if the price approaches that level. At this point, I have no interest to be positioned on dollar index. I am already on gold and on silver. Cable, very similar with other.
The Widowmaker.
I'm sorry, Steve?
Cable, the Widowmaker.
Yeah. Very similar with other, like similar as an NZD versus dollar, euro versus dollar.
All this is a potential
a potential inverted heads and shoulders there with a validation or a breakout level above this daily fractal at 127.63. So this is the level where I think if the market violates above and if remains above this level, we will see the price trading.
General, this 128 area is also horizontal support.
Exactly. So
it's also the 38.2% fib from the last leg lower. So
from this one, yeah.
Yeah, so quite a lot of resistances are piling up there.
The pattern itself, it was printed at 168 extension, was expected to be formatted at 168 extension. It is printed a few points below, as we can see, printing monthly, weekly and daily fractals below, and now it's developing into these inverted heads and shoulders. Again, if we use an extension, I will use the wicks, so the lower lows and the higher highs from this structure to project the eventual price to, let's say, 200% extension from that range. That will put the price at 50, nailing the 50% retracement, in fact. So this is the default target for the eventual, at this point, the eventual inverted heads and shoulders. Breakout above this daily.
Back to 130, yeah?
Back to 130, back to 129.70. So this, and the 200 moving average also approaching it or pointing to that level, went for 129.44 at this point. So, but again, this is not valid yet, so we need to wait for a validation for that to happen, and that is and very similar, as I was mentioning, euro versus dollar. This bullish butterfly, a double bottom, very similar and inverted with Dixie. It has printed a double top. I'm sorry. We are now approaching the 200 moving average. We have a new daily fractal resistance printed at 113.47. And something is missing here because I don't have my Fibonacci retracement from this fractal to the most recent lows. So we see the price at this point rejecting the 50% retracement.
Let's see. I'm not convinced that we're done moving higher. Let's see.
Me neither. I still believe there's a possibility to trade even higher. And to I don't know if you want to share something else, Steve.
Let me try to share, because we have some questions, but stay here. Let's see if it's going to work. I haven't logged back in. Let's see now that you have the screen if I take back the screen if it's going to work for me. So
Okay.
tell me if you can see my screen, and most importantly,
Yes, I can. Yes, I can.
is it moving?
Awesome. It is moving. Your mouse is moving, and
Okay,
your
perfect.
charts also.
So two things I wanted to show. Yesterday, explicitly, I mentioned that I see signs that despite copper not reaching my downside target, that the downside momentum is waning. And specifically, we went down to the 4-hour chart and we looked at this as a descending wedge. And we did break above it. As I said yesterday, that it is a decent, chance scenario, and we are pushing towards the 275. So keep that in mind. If we get rejected from there, fine, we can continue lower. But if not, then we might even retrace this whole wedge and make it back to 285. Okay, so I think that copper is one worth monitoring. And then I'm also going to show, we have questions about the Euro Aussie, the Euro Kiwi, but I'm also going to show you the Pound Aussie, the Pound Kiwi, etc. So I showed this in the chat room yesterday as well. Euro Kiwi has broken above this channel. This was clearly corrective move. I mean, once we broke above it and once we saw that, there was no continuation lower, that was a significant telltale sign that, that was just corrective. And just look at the RSI. The RSI on the 4-hour chart has already broken above 80, which is also something that you don't expect to see in a market that is just, correcting higher. And of course, now the next objective is the 127.2 extension of this correction at 172.75. And very likely, because I like it as an extension, the 161.8, it very usually gets hit at 173.75. So 172.75, 173.75, potential upside targets for this breakout. So clearly,
74.
Clearly, a nice breakout here, and the same situation with Euro Aussie, already to new highs. It seems to be losing some momentum here, but upside targets remain the 127.2 at 163.10, and at the 161.8 at 163.80. Equivalently, we were showing yesterday the Pound Aussie and the Pound Kiwi that they weren't recovering that well. But once we got this breakout from the Pound Kiwi higher, that obviously points to a stronger corrective move higher, in which case now you should be monitoring 194.50 as the next upside target, and let's see what happens from there. Okay, let's see what happens from there. And Pound Aussie, still holding the weakest of all, as you see, still holding this potential bear flag. Even if it keeps creeping higher towards 183.60, there is still a chance that we're going to get rejected. So this is to cover the crosses that we have questions about. Did you have a chance to check DAX and Nasdaq, says Costas? Costa, yes, I had a look at them yesterday, and Andre covered them today. Nothing has changed. I was showing yesterday that the DAX was flirting with an upside breakout from a clearly corrective ABC pattern, and here it is. It's finally pushing higher, so I do think this constitutes a bullish break, which targets higher prices, with 12,600 being the next upside resistance to monitor for, and then 12,900, the 78.6 from the all-time high. So I think those are two upside targets that it's worth looking for. So, both remain quite bullish. We also have questions about what is happening with gold and crude. So let me start by having a look at crude. And Andre, I'm going to pass it back to you, because now I will have covered the questions and you will have time to cover a few more pairs. Gold back testing this horizontal support resistance area at 1320. Keep an eye on this. We might find support from here and continue higher. Alternatively, we might retest 1300. As long as we remain above 1300,